Welcome to episode 12 of the Blue Screen Podcast, and I'm your host Abongile Papa again, you feel me? And we're here again today, man, and here we're gonna talk about basically the COT data, what came out this week, what happened, what that's supposed to mean in the markets, at least in our perspective. And actually we have something interesting because hopefully one day I'll be able to, definitely one day I will be able to, but I hope that sooner rather than later I'll be able to share my screen and stuff like that, and so that you can see what I see, so that I can speak on both technicals and fundamentals. And today actually, which is something that's not really normal that I talk about here, but let's talk about it anyway. The technicals, according to my technicals, I got a reading for at least a signal to go short now, which means that, I'm not going to say that this is a permanent thing or this is something that's, because there's too much geopolitical tension and there's too much uncertainty for us to be able to say that, to definitively say whatever that word is, man, you know the word, to say that now this is a short forever. This could just be another deep retracement, just like I said, because there's way too much geopolitical tension that's going on around the world right now, and it would be naive for us to think that the bullish side is just dead. It could just be because that sellers don't have enough liquidity to keep prices going up, so maybe that's why it's retracing to these levels. But on our side, we got a technical signal, meaning the charts, that's telling us that we are in for a short side. And another thing that we plan on introducing on the podcast is a flipping challenge, because we came up with this compounding plan and we want to test it out, but we thought, why not just test it out on live so that you can see it? Well, not really on live, but we will track the progress throughout the week, every Friday, starting from next week Friday, because I don't feel like doing that now. So we'll do that and then we'll see how that goes. So anyways, most of you are here for the COT data, so let's get started. The first thing is retail sentiment. Let's talk about retail sentiment. We have seen that retail, I don't know if I need to keep explaining this or what, but retail sentiment seems that every time that the market is doing something, retail sentiment majority is doing the opposite. And we have the same thing happening right now, which is showing us that retail traders are 54% long, considering that the bias is more on the short side according to the charts. That tells us to not really stay away, but be more cautious if you're gonna be long the market. Make sure that your stops are a little bit tighter and your take profits are a little bit closer, because the chances of you getting a swing trade long on the long side are very minimal right now. And that's what we have for the COT data, which is an improvement, because I think last week, let me check, what was it last week? Well, if I can find it, let's see. Yeah, they were 59% long, which means they are a little bit less long than they were last week, but they still long. But these are the normal parameters though. Like usually when retail sentiment strays around about the 60% like line, that means they drastically, like whatever that trend is, it's happening at a drastic rate. But when it's around like just above majority, which is above 51%, that's just telling us where the trend is, and we can use that to like go against them, not really in a malicious way, just pure statistics which tell us that retail traders lose money. and we don't want to lose money. So that's why we are most likely to be on the short side right now, at least for the long term. We'll still take like short trades, long trades, but those are very cautious trades that we take. I'm actually in a long position as we speak, but it's a very short term one. So let's move on and go on our Instagram so that you can see the trades that we're taking. I think I'm gonna start putting the Instagram somewhere, but definitely the description, but somewhere within the visual aspect of the video, the podcast, you know. And the next thing that we're going to talk about, which I must say this week, it kind of came out mixed. The COT data came out very mixed, and what I'm seeing right now is producer merchant. That's what we're going to talk about, and you're going to understand why I'm saying that it's mixed. So right now we have updated data from Trading Jester again. It sounds like we're sponsored by Trading Jester, and I don't even know who owns it. So either way, man, we use that because that's a reliable place to get this data. So, and we more about like helping people rather than trying to get stuff out of people. So let's talk about producer merchant. So we saw that this week they actually subtracted 1,190 short contracts, which shows us that the market should be, because there's an inverse relationship between producer merchant and what's happening on the charts. Every time producer merchant is short, the markets are long. So if they took away their short positions, that means that they're gearing up for a long thing, if that makes sense. I hope that I worded that right, because I'm still trying to get used to talking on a microphone and articulating myself well. So some of the things might go over your head, and so just bear with me, man. I'll get better at it, and you'll get better at trading too. And then we see also that they added 120 long contracts, which means that the thing is that the short side, right, what it's telling us is just that they subtracted 1,190 short contracts, but that does not mean, oh no, I misspoke again. This means that because they subtracted 1,190 short contracts, that actually means is that they uninvested 1,190 short contracts, meaning that they're not as short as they were last week, which is a bullish indicator for that specific thing, which is why we don't only look at the producer merchant, but we also look at the managed money, which is showing us that managed money is also, which is why I say it's tricky, because the right now data is telling us a different story. But I think the more data we get, like at least next week's data might tell us something better, because that's how the markets work. We work with what we got, and then we go on from there. So let's talk about managed money. Oh, and also there was 65.03% short last week, meaning that they lessened their short positions from 65.48% from last week. So let's talk about managed money right now, which is the smart money. So managed money is telling us that they added 6,490 long contracts, right? So what this is telling us is that it's kind of simple. Usually what happens is that with managed money is that they usually dictate what happens in the market. But then again, also we need to keep in mind that they also kind of, their disability in the markets is that they take a long time to get their positions out, and we don't get the data fast enough for us to make definitive decisions. So this is data that we had from the 23rd. So that cannot tell us exactly what is happening now, which is why we pair this with our technicals so that we can get better readings. Which is why for me, even though they added 6,490 long contracts, I'm still a bit more on the short side because of what the technicals are telling me. And they also subtracted 913 short contracts. You see, which is why I say that this data is mixed, and I spoke about technicals. This, and mind you, with technicals you can use whatever strategy, it does not matter as long as you have an edge in the market. So this is purely just to see which direction we lean towards in terms of like longer term trades, because I take short term trades, but I do have trades that I hold for a long time, which were like the buys that we bought from gold when the trend started, that we got from just the beginning. And usually when trends switch, this is what happens with this data, because with smart money they don't, which is why I'm telling you that this week there's a high probability that the next update of the smart money side of the COT data, we're gonna get big changes within it for the short side. So which is why I say that this is not like a law. You don't have to, like, there's no law that says that when managed money's COT data comes out and says that, which is why I also explained in the beginning when we started this segment within the podcast that this data is not a right now indicator. It's like a more like something to give you an extra edge within the markets. So you cannot just say because managed money is long, that could be longs from last week. They could be trying to get out of those positions because it's not easy for them to get out of positions quickly. So you get me. And there are also different types of people, entities actually, who are involved within the managed money side of things. It's hedge funds, it's like a lot of things, quants, and some of them trade short-term styles, so that might affect the data too. So you get me. Anyways, man, that is all from me today, and I wish you all the blue screens in the world, man.